Hey everybody, it is Dave Masson with Engel and Volkers and the Dave Masson Real Estate Group, and today I'm going to touch on the Vancouver housing market and if we're actually going to experience 3 market cycles in 1 year. But before I get into that, thank you for watching. If you enjoy my content, do me a favor and subscribe and like this video so I can get in front of more people just like yourself. So, while the Vancouver real estate market, it's no secret, 2022 and 2023 was a bit of a roller coaster ride. We didn't know what to expect, especially, March of last year, we had that first rate increase. And at that point in time, we saw the market completely die off, and that continued throughout the year. And it didn't really pick up much speed because we saw rate hike after rate hike after rate hike. And as we saw that, values came down and there wasn't much buyer confidence in the market. And then we turned to January of 2023, and we kind of started out the same way we ended. It was slow, a lot of speculation in the air. Buyers, they weren't as confident as we would wish, so inventory was sitting on the market and we were seeing values decrease by the month. And then in March, we had that first rate pause. And when that pause happened, well, it felt like there was a sudden pulse in the market, and we just all of a sudden went from a buyer's market straight to a seller's market. Houses that were on the market for 30, 60, 90 days were now getting offers at full price, and some even over asking. And then all of a sudden, sellers were signing direction of offers once again and holding out on offers so buyers could see the property and they would have the offer date, and things were selling again over asking, subject free, drafts attached to the offer. And that rescission period, well, it was implemented, but not many people were using it because they knew the values were increasing month over month. So there we are, we're going from a buyer's market into a seller's market. We had the rate hold, another rate hold, and then in June we had that increase, and it was tied to the inflation going up, which is kind of tied to the housing market. I won't get into that too much in detail, but housing costs obviously were up, rentals are up. That is tied to some of the inflation. However, I also feel that they saw what was happening in the housing market, and we were getting hot again. Houses were selling, way over asking. Values were increasing at rates that aren't really healthy in the grand scheme of things, and they probably wanted to, nip that in the butt as well as kind of curb the inflation because we were not where we wanted to be in terms of the numbers they had projected. So they put in the 25 points or 0.25 increase, and at that point in time, we just stalled again. All of a sudden, places that were selling over asking and whatnot had a quiet approach to them, or buyers were visiting, but they were being a little more cautious. They were kind of wondering what's going to go on the market. We have a July rate hike that's on the horizon. We don't know for sure, but that's kind of what I'm hearing from my financial investors and from my mortgage specialist, that there's going to be another rate increase. And I think buyers feel the same way. Therefore, they are being more selective. So all of a sudden, we went from a buyer's market, we were in a seller's market, and now we feel like we are in a buyer's market again. We have not been in that balanced market. There's a lot of speculation going around, like I mentioned before. A good example would be we had a row home listed, one of the best row homes in Willoughby, in Langley. We had almost 30 groups through on the first weekend. We were priced competitively. We were below the last sale and not one offer. And I went for feedback, and a lot of the feedback was stuff like, there was some speculation in the market. Like I mentioned, they were unsure, or they wanted to see what was going to come on the market, which tells me no one is in a rush anymore. And this might continue out through summer. I think we're going to have a slow summer, and the reason being is because that rate hike is on the horizon. Vancouver real estate typically slow in the summer as we all enjoy the outdoors because we're only granted so much time to do so in Vancouver. And then the fall market will approach. And what's on the horizon for the fall market? Well, that's hard to say. That's going to be tied to the interest rates and what happens there. That definitely affects the demand. So what does this mean for you? Now, depends where you sit. As a buyer, my advice is if you are really considering purchasing a home right now and you are eager, you need to go get pre-approved and get the 90-day rate hold. Get that 3-year fix. If I'm looking at an investment, I would go in the 3-year fix because we are projected to go down by the end of 2024, 2025. So if you jump in a 3-year rate hold, you should be good. And as we all know, when rates go down, values go up. And right now we are seeing stuff downtown core, for example, in Vancouver, condos that are being priced and selling less than the 2017 prices. So there are some great buys out there for the downtown Vancouver area, and that goes all around. We are seeing prices take a significant hit in some pockets in regards to what is available and just the lack of interest in those. And as the interest rates go up, I think we're going to see values go down. So if you're serious, definitely get that rate hold in place, the 90-day rate hold, because if they announce those rate hikes in July, good chance that over the summer we see decrease in values again, and you're set up on a lower rate when you want to put forth an offer. Now, if you're a seller, this means obviously you have to take way more preparation when selling your home. I'm always keen on doing it regardless, but now is more important than ever. Now is the time where you definitely want to invest time getting the place decluttered, making sure it's show home ready. Do the staging. I know some people don't feel like doing that, but it makes such a difference, especially in a buyer's market. You want to stand out and make sure your house has less days on market and less price reductions if possible. And definitely just map things out. If I were you right now, I would be selling before I buy to make sure the numbers make sense for you and you get the actual market value of your home and you don't sit too long. You don't want to be stuck, purchase a home and then not being able to sell what you anticipated on selling for. So that's very important right now. So get that evaluation done. Don't go too far back. Don't go 90 days back, because again, we have seen such significant changes even in the last 30 days that I would go 30 days back. Look at the numbers, make sure they make sense. Maybe you can move up. I think there are some opportunities for people who want to move up right now. Or if you're an investor, again, lock in on that 3-year rate and just look at the inventory that's out there. There's a lot of stuff that is at least breaking even right now with the potential of cash flow once these rates come down. So thank you for watching. If you think I missed something or if you have a different opinion, let me know in the comment section. I would love to hear from you. And if you'd like to book a consultation, you can do so through the Calendly link in my YouTube page. Thanks again. Stay safe and thank you for watching.